downside. So he's the master yin yang yen guy. Sinatra, how are you doing? Anyone catch any downside in indices? Mike, AJ, James, hi Patrick, Marcus, Ryan, K-Man's here. Coffee time. Joe, hello Joe, welcome to Face. When did you find us? So who coattailed Blake and Ryan and bought yen? Glenn? Michael did. Marcus did. Who's not a member and caught it from them giving it away in Face? Anybody? I'm sure there's at least a few that are not subscribers and caught the long side of yen. Always been here, Joe? Okay. Bran, you did? Okay. Anyway, here's my suggestion. That if you did it and you caught that, hi AJ, that you join ForexAnalytix today to learn how not to give it back. Who has had a good run and given it all back before in their career? I have, more than once. How about you guys? Yeah, it's very frustrating, isn't it? And more, yeah. Okay. I know, Michael, you're with us. So anyone who uh hasn't learned how not to give it back, it's if you want to trade for a living, you can't do that. Okay.
Dale, it's one of the main conversations we've had on the Morning Edge and the Daily Roundup over the last 2 days is
Wow.
it's yeah, it's one of the
Telepathy.
it's one of the it's one of the things that I think those of us that have been trading long enough, it's just as bad as when you're in a deficit, you're in a hole,
Drawdown.
you're
Yeah.
you're you're losing money, and it's like put down the shovel, take a step back, take a breather. When you're on a hot streak, your ego gets ahead of you. And actually we were just having this conversation in the chat room yesterday. Eric is like, I found myself a little too aggressive because of I've had a great week, and that's natural. But I
Yeah.
think if you can recognize it, it's kind of like, it's like uh, I don't like using the gambling analogy, but it's a perfect analogy for me because I'm not a big gambler. It's like I find myself up money. I will
Yeah.
actually put I will put the chips back in my pocket. Then the dealer will yell at me for putting chips in my pocket. Then I have to take it back out so I can cash out to get bigger chips, put them back in my pocket, and then leave just a couple of chips on the table. And if I lose them, I walk away and go grab a beer somewhere. That's
Okay,
exactly how
so
I
there
operate.
okay, Blake's got his psychology and of how not to give it back. And the big mistake, Blake, that people say, you know what it is? They hear it in their head. They hear this. It's the house's money. You're wrong. It's your money now.
That's right. That's exactly right. And you're 100% right, Dale. And then so therefore, if it's your money, only give back a very small sliver of it if you feel the need that the market's still going to be volatile. Like this is like right now. I mean, we just came off a week of massive volatility, and there's
There it
probably going to be
is.
more volatility next week with the BOJ, the
Yeah.
FOMC, the Bank of England. We got jobs. We got Apple earnings. We have a lot of stuff going on next week that's going to create more volatility. So just make sure that you're not giving back all of that you just made this week. And
Okay.
let's also be sensitive, Dale, to the fact that there are people that were not on the right side of the market this week. And that specifically, we had this
Sure there.
conversation with the ForexAnalytix traders the last 48 hours. Like most of us did well. There are those of you that didn't, because just like any big move that you see, there are going to be people out there fading it. And so just the same thing, if you've made a bunch of money, if you lost a bunch, take today off, take the weekend off, obviously, but take today off, reset, get your mind back in a good place usually takes me about 24 hours. That's me personally. Some people probably a little more, some people a little less, but for me it takes me about 24 hours to reset. But you have to do it. And after big moves that we've seen this week, there definitely are people that were on the wrong side that didn't make the money that some of us did, and vice versa. It happens all the time.
Yeah.
I can add to that as well, Blake, because that dollar yen trade actually paid for a lot of trades I got knocked out of before then. I
Yeah.
tried the Aussie dollar into the 66, that got blown out. I tried the dollar mix up 1850, that got knocked out. My dollar China got knocked out. So, it's not all about just trying to make money. Sometimes if you just get some money back that you lost, that's as good a win as anything.
Yeah, another method is pull some out of your account and maybe go out and buy a silver coin, buy some coins, or put it in a T-bill. Okay, you don't have to always be building a larger P&L to make more money. If you're doing fine with what you're trading with, a great way, if you're not disciplined mentally, is to pull it and diversify it into something else. Maybe there are shares that you like. But that way you have something else happening for you without it being up to you to be managing it every 5-10 minutes. Okay. So and you know what? How about this? Take some out and spend it. They're only digits in your accounts, like chips in Vegas. It doesn't mean anything. But go out and you know, buy something you've wanted for a while, and you have something you could see that's a tangible result of knowing when to click your mouse. Okay, that's another way to do it. I do that. So you want to reward yourself. It's tough work. So, when you have some extra cash, treat yourself. You're not going to take it with you. Okay. Yeah. I mean, there's a story about this guy who didn't like his family. And, an angel said, "Hey, your time is up. And, we're coming for you." And he asked the angel, "Can I bring just one suitcase?" And the angel said, "No, you can't bring anything with you." And he went to St. Peter's and asked him. The angel came back and said St. Peter said you could bring one suitcase. So the guy liquidated all his real estate, stocks, bonds, metals, didn't want to leave anything to his kids, and converted it all to gold bullion, packed his suitcase. He's at the gates, and St. Peter goes, "You can't bring that in there." And he says, "Well, the angel said you would make an exception." So St. Peter says, "Well, okay, let me see what you have inside there." So he opens it up, and St. Peter looks at that suitcase of gold and said, "Why the heck would you bring pavement?" Right? Streets are paved with gold. Anyway.
But that's funny.
Huh?
That's pretty funny. Actually,
Anyway, so
this is the whole conversation. I mean, this not. I think about like and I know we talked about this. Everybody that I know that has their parents that are in their 70s and 80s are YOLOing it and spending money like it's like they're not taking it with them, so they're spending it.
yeah, why not? Die broke. Um, all right, so let's get to the markets. We have a number today, right? We have some
Yeah,
data coming.
yeah, PCE and
Yeah,
Michigan, which is the final number, but PCE
okay.
is the one
All
up.
right. Okay. So I don't think the dollar is done retracing. It looks like it's, basing here for the move up towards 105. Maybe that happens on after this rally is done, uh, which I think is going to be just corrective in NASDAQ. I think the highs are in NASDAQ. Maybe not S&Ps, shallower. Maybe they could generate something. And So, looking for places to recommit on a wave 2. This was 5 waves down, so I'd really welcome a rally back to 20K.
Did
in
you see the
NASDAQ.
bear flag completion yesterday in the E-minis? I mean, that was like
That was it.
It did it right after the open because it was kind of almost there, and then as soon
This
as the
flag up here.
what's that?
This
Yeah,
flag up here.
yeah, that's just yep, that's it. It's just
Okay.
a simple flag pattern, and that last red candle that you see there was right at the open yesterday, and then we got the reversal all day yesterday right after the open. So that was a perfect
Look
bear
what
flag
else it
pattern.
held. Oh, it didn't. It what? I guess that's
It
the
was
weekly.
it held the 38% retracement too of
And I
that the
think
whole
it
last
held
leg,
a
or
50 day.
50% retracement. Hold on, I
Oh
gotta
no,
look.
it took it out. Took it out. All right, but there was something I saw at 5400. I think this is wave 4 of lesser degree. So maybe we rally back to 56. But I'll tell you what, under these lows, look out. Under these lows, look out, because my ultimate objectives in NASDAQ before the end of the year is here, at least. Okay, I think we rally and then we try 17, look at 17. So 17 and 20 gives you 14, which is, some weekly moving averages. So that's my intermediate term target by the election, maybe sooner. But that's not the best looking weekly chart. And in fact, what we have 3 days left, and with all the positive seasonality in July. And then my buddy Mike said, "Oh no, that seasonality was only for the first half." Baloney. When they talk about seasonality for a month, they're talking about the whole month. He was right. You had to book it by mid-month, but that doesn't have such a great look, does it? And we almost got to last month's low. So not a great setup going into August. So sell rips if they accommodate you with with some type of retrace. And that's it. What do you think? How much more are you looking for in US dollar yen, guys?
Far as it'll
That's
go.
really an ugly month. So you have an outside month happening in the yen. We made new highs. See that wick? Took out the previous month's low by a ton. And that's an ugly month.
Well, Dale, I'll grab the charts, but guess
Okay.
what? We actually have K-Man back here now,
Oh,
and
okay.
he has returned. And I got to ask, Kay, were you able to trade at all? I know it was your son's graduation. By the way, congratulations to you and your family, and to your son. But were you able to trade this at all? Because you might be the new take the day off or take a couple of days off, and we're gonna trade everything indicator. So
Yeah, Armageddon, right? When I
yeah.
this, I did, and I updated the trades room over breakfast yesterday morning. I bought it at 152 and a quarter.
Ah, okay, all right. You joined. We figured it was such a big level. I mean, you, Ryan, and I. We actually all posted our trades in the trades room. So good stuff.
Yeah, you just hovered over it just a little lower, where I updated my positions just a bit lower. Yeah, you're nearly there. Oh, I think you went quite a bit up there, but
Oh, I did. I went a little too far. So anyway,
there it is.
yeah.
They're just a little bit above, just a bit above there. You see the entry? There's the
All
entry.
right. Very nice. Very nice.
Oh, yes, I still got like a little bit left over, but I already took a lot off because, as you all rightfully said, after such big moves and P&L's been shaken or doing very well, it's always good to stay a little bit on the cautious side. Huh? So we have to take the money when it's there.
So, you know, we do, and actually,
155.
so Dale's question was, how far can we go? And I want to say, I was just chatting, and I got to mention this also. Next Thursday, not Friday, the jobs report. Next Thursday, we have the breakout, the guys from the breakout at the Gelber Group. So if you guys remember, this is a big prop firm out of New York and Chicago, and they have an office in Amsterdam. They're doing a free, you know, cash prize, $35,000 in cash prizes. You have to apply. It's free to apply. They're only going to accept maybe 20 or 30 people. And you have to be US based. And Brian Gelber, you'd probably know him from the Market Wizards book. Anyway, I was talking to Tommy, who has been with them for 19 years. And we were talking about the yen because he's a very aggressive yen trader. And we were just talking about, you know, trading it this week. He had missed, he unfortunately he missed the bottom there, but we were talking about where it could go. And I did a video on this yesterday. I'm looking for a move back up towards 155 and change. This is going to be the 38% retracement. And I actually want to be long yen ahead of the BOJ, just in case the Bank of Japan is a little bit more aggressive in their monetary policy decision next week. Now, remember, we do have not only the BOJ, we have the Fed on the same day. But I want to ask you this, K-Man, and then Ryan, I'm going to ask you the same thing. What do you think the BOJ is going to do? Do you think they're actually, do you think they're going to hike? I think most of the market believes there's more than 50% of analysts believe there's going to be a hike to the degree of 10 basis points. But do you think it's possible? Because I do, because they only have a short opportunity or a short window to do this. Do you think that they could actually raise more than 10 basis points?
Well, yeah, that's it's a good question. But I think if they move the needle enough on the bond buying, they might only do 10 BPs, because doing 25 would be sending a really strong message to the market. But it does look to me that they are going to be perhaps a bit more focused on that bond buying reduction, which which as such is a form of QT, right? So those combined, it would be something exceptional if they really would reduce the bond buying by half and then go 25 BPs. Then yeah, I guess your 150 is toast in dollar yen, regardless what the Fed does. But they're still not there to derail the government finances. So I would suspect that they might. What I think is that they will do is that they will reduce it by 1 or 2 trillion yen a month and do 10 BPs. That's
okay, and that probably wouldn't be enough, in my opinion,
well,
to break us through 152.
Well, it all depends what the Fed signals then a few hours later. But yeah, to break 152, that won't be enough. I don't think so either, because the market will already have priced it in. We will still have a pretty big interest rate differential. So I guess that we are going to try to rally back then. But I also think that the market already having in its mind what the Fed or ECB or Bank of England even may do, if we go back up in the yen pairs, it should be more gradual than what we've seen over the past months. You know, like I've got a bit hard time to see the runaway train that we saw before. Although it's yen, who knows? So yeah, but
okay,
go really strong. Yeah, then I think that all those, because it's what I said, and you have to look at the yen pairs and not only dollar yen. And then what we've seen was exactly that. It's a liquidation of all the yen pairs that happened, not only dollar yen, but you saw euro yen. Well, all of them, commodities yen, and all of them got liquidated to a certain extent. So we have to see what happens on all the other pairs as well.
All right, and Ryan, what do you think the BOJ? Let's stay on the topic of BOJ. What are you thinking here? And you said you still long a smidge. of dollar yen. I actually sold mine yesterday. Obviously now a little early. I sold it at 154.10 or something like that yesterday on the first spike above there. But it still looks like we might have some juice left in it. What are you thinking?
Yeah, you know me. I like to stay on the trade as long as possible. It's like riding one of those bucking bronco machines. Keep holding on until you get thrown off. Yeah, it's looking strong. You know, but we're not out the woods yet. It's done nearly 1,000 pips in 2 weeks. So I can't call what to trade, what level to trade for this, for the BOJ in a few days' time. We could be anywhere. It could be up at 158. We could be down at 150. Who knows what this thing might do in between? So I'll only judge the levels at the time. As far as the BOJ are concerned, I think it's a close run thing. The sources noises that we've heard recently seem to suggest that some of them want to go on hikes, others want to hold off until consumption and inflation is really entrenched, shall we say. So I think it's a bit of a coin toss, this one. A more hawkish move would be if they did both a rate hike and cut QE, but then you just have to gauge the size of both. A more neutral would be maybe a cut to QE and then stand on hold, because then you got a bit of one, bit of the other. And dovish, and that's what the market wouldn't like, is if they don't do anything at all. So that's my three main scenarios for what might happen, what price risks might unfold from that.
Got it. Well, thank you for your input. And by the way, Dollar Bill Henderson says that, Blake, I got my 155.37 for my wave 2. I mean, that's basically the previous support right there. My 2 cents are when we get to technical levels that are like previous support levels, or right, that you can see right there, we might overshoot. And that's what I'm hoping for, is I'm hoping for just a little bit of an overshot of that level. So basically in the same neck of the woods. We've seen a lot of inaction from the euro this week. Sterling's been very quiet, just really probing and sitting around this 128.60. I believe this is a very critical level that's we've been basically magnetized to that this week. I'm wondering if the PCE is going to get us off of that. And so with that being said, K-Man, you have any? I know you're just fresh coming back, but do you have any thoughts on PCE this today? We've got so many of the components already, but what do you think
on the PCE today?
Yeah.
It's gonna go. This thing should be well enough documented not to come out too far from expectations, right? Looking at the components, yeah, I still think maybe it's like 0.1 or so lower over the year over year. I don't think it's going to change too much. If it's too hot, then you're going to see those stuff like dollar yen perhaps shoot a bit. China as well is making a comeback. Swiss perhaps. Yeah. Dollar yen, I think, yeah, it's possible, already a few stops from people trying to fish tops above 155, but I don't see it run too far either. But one that I'm keeping an eye on is dollar China is really making a very decent recovery. I bought it overnight, basically. I missed the whole thing down to 720, but I got stopped out of a long around 727, which I managed already, so that didn't really cost much, but I completely missed the 720. So I bought it higher overnight.
Dale, we are in a political shitstorm right now, and what's the chances, putting your tinfoil hat on? What's the chances of PCE coming in below expectations today to keep the people at bay?
Yeah, well, Tony makes a good point right here, that regardless of PCE, the market's due for a bounce. But yeah, I think that would the market needs a benign number today.
Yeah.
Tony thinks if it's too hot, the market's still rallying.
You know,
I can
I
see
don't know
that.
if the market's going to rally on too hot, but I think
Yeah.
I think the market does need a benign number, and I think that this administration is going to make sure there is a benign number. Oop! I just put my tinfoil hat on myself. So
Yeah. Well, yeah, we have Pedro coming on. There's a lot. I'll be able to ask him about some of the Fed speak
yeah,
that's been going on with some people like Dudley saying we should go now. He was in the higher for longer camp, so he's come out of the closet, and he's a very partisan guy, though.
yeah.
Doesn't
Well,
care for
having Pedro on is going to be great for those of you that
yeah,
do not know. Pedro da Costa is coming on today, and he's over at
MNI.
MNI, right? MNI,
Yeah,
is that what you
yeah.
said? Yeah, MNI. So he's great economic journalist.
He talked to Sheila Bear recently, and she has a lot of foresight. She saw a lot of things coming before the Great Recession, and I think she sees a lot of things coming here. Saw a picture of her. I guess there's a book out called The End Game. Have you heard of it?
I
Anyway,
have heard of it. I haven't read it,
she's
but I've
wearing
heard
that
of it.
T-shirt. So I'll ask Pedro what it means.
Nice. Okay, just real quick on the S&P. You can see obviously broken channel, 38% retracement of this is the April low, I believe. Let me confirm that. That was the April, yeah, it was the April lows to all-time highs, 38% retracement, bear flag pattern completion. From here, technically speaking, any rally towards 55.25 should be sold. That's if you want the most basic technical analysis out there. You got about another 75 points of a rally. So that would take us probably into midweek next week and give Dale a perfect turnaround Tuesday setup, which going to what Tony just said just a moment ago in the comments. Yeah, I mean, the market, a weak number today could get the market moving. We could see a continued rally higher. I would assume that the dollar comes under a little bit of pressure, but I do want to say that the dollar's got this set up, and it's a really nice inverted head and shoulder pattern, Dale.
Oh yeah,
So we
pretty good.
could now, if we did get a weak print, we might negate this inverted head and shoulder pattern from a symmetrical standpoint. It wouldn't because we'd end up spending a couple more days,
Yeah.
filling out the right shoulder, which would, like I said, I when the symmetry is gone, is not so good. But if the data is hot today and we get a breakout above 104.55 and you see a bullish move out of the dollar, that does take us well above 105 on an inverted
Yeah.
head and shoulder pattern. So
Right. Nice look.
there's that, there's something. So matter of fact, let's get set up for it. Ryan, last minute thoughts before the PCE. Let's get the data flash off of ForexAnalytix. Here's your live squawk feed. I'm going to pull it over off to the side. And let me grab the three charts that we usually look at. But what are you thinking? What are you thinking, Ryan?
Not a lot really. Yeah, it's been a busy week. I'm just going to manage what I've got. Dollar CAD, I'm still short that one, so I'll be keeping an eye on that. We hit the April high 138.46, pretty much on
We're
the
nudging
nose.
up against there right now.
Yeah, a bit shy of it. So it needs to get back below 138, and then more importantly 137.70, where we had the break point.
All right, K-Man, I know you listed about 1,000 different things that you're trading right now, but any one in particular that you're thinking?
Yeah, one that I haven't named yet. 23.
Oh, geez. More free for the free. So if you guys like free stuff, K-Man's dishing all the free shit out right now. Go ahead.
23.5, 23.90 on gold. We saw a bit of liquidation there, but I think if it takes back 23.90 on a week one, that would be relatively positive.
All right. Thanks for the free. All right. Dale, we are about 20 seconds away. Any thoughts?
Waiting for the battleground in the Dixie up around 105.20, and would love the market to accommodate me with a fib retrace in NASDAQ to recommit to what I took off yesterday.
All right. Well, let's see what the dollar does here.
Don't try and make your week on a Friday, guys.
Dollar index catching a bid. Do you guys see the data yet?
Unchanged on the core. Not as low
2.5.
as expected.
2.5, a tick lower. So doesn't look like we're going to get much of a reaction here. The euros, yeah. Ugh.
That core was expected to drop and it's come in unchanged. So that's
Yeah.
there's your stickiness still.
Yeah. Sticky.
Forget a July hike. July cut next week.
And you know what? How about they just cut and give us like give us the full 50 right now. Just give us a half a percent right now for the election and then call it a year. How about that? Can we get that?
That'd be nice. You forget volatility after that, though.
That would give us some volatility. But speaking of which, next week, guys, is going to be a big week. Like I said, we got between the NFP. Ryan, you're out next week. Oh, it's going to be huge volatility because Ryan's out. NFP, the Fed, the BOJ. We got the Bank of England. We've got a lot of earnings. Apple earnings are next week. Lots happening next week. So to take advantage of all this, make sure that you guys check out the Trader Funding Program. If you take an assessment for the next couple of days till the end of July, you'll get a one-on-one consultation with me. I've managed to have a lot of consultations this month, and it's been great. We're going to be putting some of those comments from those people that I've worked with over this month up on our website, and you guys should take advantage of it because it's a great way to take advantage of it. And Dale, I want to say happy Friday, and Ryan, we're going to miss you next week, but we got K-Man here. K-Man, welcome back, and have a great interview with Pedro.
Cheers, all.
Thank you, Blake. Thank you, team. Ryan, have a nice trip. K-Man,
Thank you very much, mate.
welcome back. And all you guys did a fantastic job letting people in on what you were doing, and you guys nailed it. So what else can people ask for free? Just a money machine here. So, okay, Pedro, I've been waiting to talk to you. Great to have you back. I also want to congratulate you on reaching a milestone at MNI. How are you, buddy?
I'm good. Thanks for having me, Dale. Good morning.
Oh, yeah, it's great to have you, Pedro. I was wondering if you might want to share, and we could talk on camera. If not, it's no big deal.
Oh, you know what? I'm not set up for it this morning, but
that's fine. I'll come off and we'll scroll around some charts. So, Fed next week, Pedro. Your
yes, sir.
expectation and what you're hearing from your sources.
Absolutely. So, I mean, the main thing is that what we're trying to game out is how much signal we're going to get in terms of how strong a signal about a September cut we're going to get, right? The market has certainly coalesced around the idea of one, but there hasn't quite been unanimity within the committee. It's certainly not in the Fed speak. Even some of the normally dovish Fed officials have remained pretty vague about timing. People like Adriana Kugler talking about later this year. Same tone from Mary Daly at the San Francisco Fed. So really watching for how much coalescing there is around the September idea. And it's really about how much of the message they managed to put into the statement. Like, did we get some kind of hint in the actual forward guidance that September is in play? Or is that something more that we might pick up from the chairman during the press conference, which would be kind of less of a strong signal that September is a done deal?
Okay. Well, you know, the market has given signs of soft patches with commodities have been under pressure. Equities, especially high valuation equities to Max 7, really taking it on the chin, trying to hold here. To me, it looks like the NASDAQ has peaked and rally should be sold now. Could there be enough justification the way some of these asset markets are acting that they're reflecting a soft patch and Powell sees it and he's ready to go? And do you think that he might surprise the market in July?
Definitely no surprise for the market in July in terms of a surprise cut. I would say the chance is almost nil. This is not a Fed chair who likes to surprise. I think
Okay.
if they were a nimble old school Fed, they'd probably be cutting in July because, as you suggest, there's certainly enough of a soft patch. With a lot of the conversations I've been having lately are really, it's not about how much softness there is. It's really about how far you are from neutral. The more inflation goes down. So even if you think neutral is a lot higher than it used to be, which a lot of people do, a lot of people think the neutral rate has risen. But even if you do, the sort of top end of neutral is in the mid to high threes, and we're at 5.5. So if you want to get closer, if the economy is getting closer to balance, as the Fed likes to say, you need to start making your way toward that. And you hear a lot of intelligent voices arguing for that. And so I think that's where the debate lies. Also, I would say that the bar for the Fed has been lowered a little bit in terms of what they need to see for cuts, and that's in part because of the deterioration that we've seen in the labor market.
Yeah.
It's not that it's falling out of bed, but we've seen enough of it to give them pause and enough of it to justify kind of moving despite a somewhat higher inflation rate, if that makes sense, if you're taking both sides of your mandate into account. And we're also going to be looking for signs of that in the statement. Is the Fed going to say something to the effect of, right now it just says it's highly attentive to inflation risks. It could potentially shift the language to say it's highly attentive to inflation and labor market risks. There was certainly a shift that we picked up in the last big speech by Governor Waller, who made the point that employment risks are the highest they've been in a while. So I think that's a part of the mandate that the Fed hasn't had to worry about for a while, but it's starting to do so, basically.
Yeah, and there are people like Sinclair. I went through your stream, Pedro, and Sinclair is a former Fed official.
She's she's a former Fed visiting scholar, but most recently she was Deputy Assistant Secretary for Macroeconomic Policy at Treasury, like until last month, basically. She had just stepped down when I spoke with her.
Okay.
And
she thinks he's late already.
Yeah, she's not alone either. That's been increasingly the tone of the interviews that we've been picking up, is that they're falling a little bit behind the curve and that they might actually have to catch up, be playing. Julia Coronado, whom I interviewed this week for one of the episodes of my Fed Speak podcast, she had a similar tone, that basically they might be playing catch up essentially by the time September comes, if there's a significant pickup in unemployment between now and then. And so, I think what strikes me, Dale, is really you asked me where the dollar is going to go. I have no idea. But the range of outcomes macroeconomically is still so wide to me, and range of possible outcomes, that is. Yesterday we had an upside surprise on GDP, right? So growth still appears to be strong. And it wasn't like a sort of fluke upside surprise. Consumer spending appears to be like actually strong, right?
Right.
Employment appears to be strong by many accounts, but it does seem to be weakening. So you could envision scenarios all the way from inflation is sufficiently bumpy this year that maybe the Fed doesn't get a consensus to cut, all the way to, the unemployment rate might be ticking up to like 4.3, 4.4 in the next few months. And that gets the Fed doing 50 basis point cuts by year end, right? So that's kind of the range of possibilities that's on my radar at the moment.
A lot of these people were calling for what they're afraid to call for this year, last year, and they were pretty embarrassed, and they didn't take into account all the money that was poured into the economy fiscally and monetarily.
Yes.
And the economy, and that was, they'd never come up with analysis post pandemic because they're not over 100 years old writing these articles. So a lot of people got it wrong, right? We were going to have a recession last year with the rate with the Fed tightening. You imagine if that cycle was one of the fastest in history. Maybe Volcker was faster, but it really didn't have much of an impact on anything, including, in my view, inflation. They say is subdued, but you don't need a used car. right? You may eat
Yeah,
in
I
it
mean,
because you
you could
can't pay
argue
the
it didn't have it.
rent.
I don't know
Right.
about it didn't have an impact on anything, but I think it had less of an impact than everybody thought it would.
Yeah. Yeah.
And I think that maybe the lags are even longer than people thought because of the lock rate effect that exists in our economy and not in
Yeah.
others.
Yeah.
So maybe now we're feeling the pinch, and I think that's the worry, is that maybe, is the bulk of the effect being felt now, and are firms finally starting to pull back, and is that what's happening and filtering through to equity markets and so on? So there's a little bit of fear and trepidation again out
Yeah.
there. Is it presaging an actual recession this time? It's hard to say, right? Nobody's gonna
Yeah.
answer your point because everybody made that call so boldly and so erroneously. Everybody's kind of afraid to make it again, right? So everybody's just dancing around the R word now and just
Yeah.
seeing what happens. People just talk about it as cracks in consumer spending or cracks in the labor market.
Do you think that we're going to be able to get off an election? I mean, everyone's assuming we're going to have one because we always have. Are you worried about the fact that, it's really, even if the vote goes through, it's not going to be accepted by either side? Where do you think the presidency is going to be decided? In Congress, the courts, or on the streets?
That's a great and frightening question, Dale. I don't have the answer to that. That's outside of my
Yeah,
guessing world, but I think it's the fact that we have to worry about it.
yeah, that bothers me.
Puts the fact that I think it puts us, it's part of what makes the US debt load suddenly worrisome.
Yeah,
I think it's the
that's a
fact
good
that
point.
we look more like an emerging market country when you have to worry about political risk of the kind
Yeah,
that you're describing.
yeah,
And emerging and countries that have institutions that are sufficiently dysfunctional for those outcomes to be possible are also institutions that tend to not repay their debts at some point for one reason or another. So I think that's really where the worry comes. It's not actually from the debt levels. Like everybody says, debt levels are manageable. The actual budget deficit's under control for now. It's just on an unsustainable path, right?
yeah.
But
Interesting.
it's not the path. It's like the people managing it and the worry that
Y-
it might be mismanaged in a way that might lead to a quote
Yeah,
unquote accidental default.
would part of that be that I heard, was it Treasury considering using clearing in the UK rather than in the US? Are you familiar with that story? Because I think Duffy from the Merc came out, and it's the most emotional I've seen him. He's been, chairman, or maybe he's a post chairman for a long time, but he was definitely upset about moving the clearing of treasuries to under the supervision of the UK. Is that a true story?
I did not know about it, but I'll have to check. I mean, yeah, Daryl Duffy's certainly an authority on the issue, and he's also a New York Fed advisor in addition to his work in the UK. So
Okay, well, he's very
he
concerned about it.
he would know.
Yeah, so
Um,
that could be a big story.
yeah,
That we're going to farm off the clearing of our own treasury securities to the UK. I mean, they've had a bad auction before, like the gilt crash,
yeah,
right?
certainly.
Anyway, check that out. Let me know what you find out.
I
I
definitely
want to
will.
huh?
Go ahead. No, I
I
wanted to
want to
mention another.
go ahead.
I wanted to mention another interview that my colleague Evan did this week with a former RBI deputy, Viral Acharya, also, attached to the New York Fed as an advisor and a former resident scholar. He's concerned about the risk from private credit in the sense that everybody talks about private credit as existing in a separate universe from the banking system. He
Yeah.
thinks that, if private credit gets into trouble, they'll somehow get bailed out by the banking system, and that premium is not priced into private credit markets and into their
Okay.
banking affiliates in any
So the
way.
shadow
So
banking system will have impact on all the ones that are out in the light.
exactly
Oh,
right.
okay. That I've heard people talking about that's where the issues will be. But I wanted to congratulate you on hitting that milestone, Pedro, of 100 podcasts.
Oh,
Um,
thank you.
yeah. So how
I
long did it
appreciate it.
take you to get there in time?
Uh, a couple of years, 2 years and change. So
Really?
yeah,
Okay.
it's been a great run, and still going strong. So
Yeah, and who you celebrated that 100th uh, show has great foresight. I mean,
absolutely.
I'm a Sheila Bear fan, not the Chicago Bears anymore, but Sheila Bear. She saw a lot of things coming before '08, and I even saw a tweet. I think she had a T-shirt on called "The End Game." Did some guy write a book, The End Game? And I don't know
I
who it
think that's
is.
right.
Yeah, and she's wearing that T-shirt. We all want to know the end game, but how about what Sheila is talking about right now that could be, she sees through overlooked issues in the financial system? Is she worried about anything?
To be honest, she's worried about the the risk that is on everybody's radar, which is CRE and regional banks. That was her actual focus. So
Okay.
she thinks that we haven't seen the worst of it, and she thinks that because we haven't, she was worried that because we haven't sorted out the um, the uncertainty around the deposit guarantee, right, and what it actually is and isn't,
Yeah.
that there might be a contagion effect from even kind of small bank failures in the regional sector as these assets become, more impaired and these banks become more overextended. So she thinks small failures, which are probably inevitable, might have outsized financial effects.
Interesting. So here's the KRE. It's benefited. These stocks have broken out with the Russell.
Yeah.
After the CPI, they called the Great Rotation. It was, I think,
Yep.
a four sigma event in Russell. I mean, historic. Um, so here are the regional banks. So if Sheila's worried about them, I'm going to start watching them right now. You know, they look pretty good to me compared to
Yeah.
something like Amazon
Yeah.
or even Apple or Google. I know a guy looking for 140. That looks really bad.
Yeah.
Um, so what are your thoughts about the market? I know the Fed is really your wheelhouse, but your thought about this great rotation, have you thought about it? And you know, the way I thought about it is everyone was bearish the market because of the concentration of money in the Mag 7.
Yeah.
Okay, so they would try and short the market, myself included, because breadth was terrible. But that wasn't successful because the market went parabolic despite it being concentrated,
Yeah.
right?
So people had to
Then,
capitulate.
yeah, yeah. And then we get that great rotation day, and that makes the bears even now after, trying to short a poor breadth market. Well, I'm certainly not going to short a market that breadth is improving and we're having breadth thrusts, and then we
Yeah.
get these just semi-historic sell-offs in a short
Yeah.
period of time. I think the market's wrong-footed, and we could have a problem. Maybe what Sheila's talking about, and the soft patch that the Fed is behind, and everyone thought things would be okay until the election, that we start having tremors in the financial markets before the election, not on it or right after it, but before it.
I don't know if this equity market is the sign of something like that happening. And it's certainly not the kind of development that would concern policymakers at all, because they look at financial stability risks more from a sort of broader credit or market functioning perspective. So
They
you
don't
know,
care about the wealth effect anymore of the stock
not
market.
not that I don't think. I mean, they would if it was like this huge, 2008 style kind of secular sell-off. That's when wealth effect debates start to kick in. Not with a kind of short run dip after a really, as you described it, a
It would have to
parabolic
be
run up.
like
I think
it would probably have to be something like 30% or so before.
exactly that was
Uh,
exactly the number I was going to say, because round numbers are good in markets, right? So yeah, the 30% drop exactly.
okay, well,
So
we're a third of the way there.
yeah, so there you go. I mean,
Okay,
if
so I mean,
but I think if we kept going, there'd probably be enough. There'd have to be enough macro reasons, right, that the Fed would probably have other worries on its plate than the
yeah,
equity market itself.
okay,
And so I think, yeah, for sure we could have financial instability pop up again before the election. I can't identify what it might be.
okay.
We could
Could
also
it
get
be?
financial instability generated by concerns of over the election itself, right? It's
Yeah,
amazing that we've been as stable as we have been, considering an assassination attempt and the presidential candidate dropping
it's
out.
amazing. Yeah,
So that's actually, you could argue the market is maybe hanging in there despite these events. So
yeah. There are a few canaries in the coal mine with
yeah,
this. I was going to ask you if you make anything out of the 2 and 10 year yield curve almost coming out of inversion, getting closer to zero.
yeah, I don't know what to make of it. I've been asking people about it, people who are smarter than me in curve analysis.
Yeah,
But it would not be inconsistent with the sort of lagged, the same old pattern that we've had in the past, but just a little bit lagged because of the factors that the kind of pandemic
yeah,
aberrations that we've already discussed, and that that the inversion was signaling a recession after all, but it just didn't come because we had this excess fiscal boost, and now, so it could be that, but I don't have a firm view on it.
okay. It still looks to me like I don't know, lower yields coming in the 10 year.
Yeah.
So okay.
And I
And
mean, one of the things that I would say is that I think the recession chances just strike me as lower right now
okay,
because of the politics, because both sides of the spectrum have reason to promise big, and in their first year to deliver big, whatever it is that they do. So, you know what I mean? So it might be through spending on the Democratic side, it might be through tax cuts on the Republican side, but I think there will be an effort to stimulate growth in the first year. And I know a lot of smart people I talk to are actually worried the Fed might have to think twice about continuing to cut rates if there's a significant renewed fiscal boost to the economy at the start of next year. So that adds to the range of
yeah.
confusing
Well,
possible outcomes that we have out there looming.
yeah. Well, not really. Maybe we have a nice decline in rates, to where, maybe even we trade 3%, and then later in the year things are kicking up, and the multi-year trend for rates is higher. So I mean, to
Yeah,
come back to 3% seems big now, but it was a 0.30 back there, right?
right. No,
So
and keep. I mean, yeah, only going down to 3 is a privilege for the Fed, right?
yeah,
It's the Fed having won the battle against the zero lower bound if it's able to cut rates and still have room to ease in the event of additional economic weakness. The problem is that uh, even at 5.5, it turns out that on average over history, the Fed tends to cut about 500 basis points over any given cycle. So the zero lower bound is still kind of looming
that's
there,
a
not too far from the range,
yeah,
and you know,
that's a pearl. Well, our neighbors to the north cut for the second time, and they're having to shore up their repo market.
yeah.
What do you think of that? What's happening in Canada?
It surprises everybody by how dovish they sound, and it has that kind of what are they seeing that we're not kind of feel to it, because there's enough stickiness in inflation that we didn't expect Macklin you know, to
Because
become
their real
that
estate
dovish.
market. People have
Yeah,
3-year mortgages
yeah,
that are rolling over, and 5
that's
year
right.
that'll roll
Yeah,
over in a couple of years. So they're having, people, and I think the consequences of walking away in Canada are much more severe than they are down here in the U.S.
yeah,
I mean, it really affects your life. You can't just hand over the keys and say, okay,
yeah,
I'll file for bankruptcy and that's
yeah,
it. They go after all your assets if you do that.
yeah,
So they'd be after my
yeah.
$10,000 bank account. So I'd have to stay in my house. So uh, anyway,
All the petty cash would be gone.
all of it, all the coins I've been stacking, yeah, everything like that, Pedro. So what's your
Man.
biggest thing that you're paying attention to, say, over the next 3 months going into the fall? Anything
Uh,
overseas or China like or
so no, I mean, I'm really Fed focused. I'm looking
yeah.
at what kind of signal we get from Jackson Hole. That's what's on my mind right now, is preparing for Jackson Hole. I'm not going this year. My colleague Gene Young is heading out to the mountains.
Oh,
But I
it's
mean,
too
the reason
bad.
I'm
It's
I'm
beautiful.
focused on it. No, it's beautiful, but I've been enough times. It's
When
time to
is
give
the date of
the
Jackson Hole?
next
Because
generation a chance.
there
Uh,
you're Biden of MNI. All right.
it's time to pass the torch.
You're doing it. That
Wait,
torch is heavy. I
does
thought you were going to carry it
does
up
that mean I
in
need
pair.
to? Does that mean I need to pace myself, Dale? Or
Pedro, I say that you and I get rocking chairs and go to Jackson Hole and hang
hey,
out and watch.
but not talk about
We'll hand
monetary
out
policy.
torches.
That's
We'll
my
hand out
problem. Is
torches to everyone.
every time I go out there, it's very stressful. It's not mellow in any way.
Really?
No,
Okay.
no, because every central
Yeah.
banker in the world is hanging around, and I got to get interviewed. So it's like the highest stress weekend of my life, and these beautiful mountains in the background, but I don't get to do much hiking.
Yeah.
But
What's the
no,
date?
but the reason I'm focused on it, I don't. It's the second to last week of August, I believe.
Okay, the end of August. So that's when
Um,
he's going to be uh, preparing the groundwork, is what
yeah.
most people think.
Well, and also there's a bigger picture message which is why I'm really focused on it, because the framework review is coming into perspective sort of later this year. And that's kind of, if he doesn't expect or want to be reappointed, which might be the case for Jay Powell, then this framework is kind of his legacy, how kind of he applies the lessons learned from the pandemic into the future of monetary policy. So just curious to see how far out on the limb they might go and how much they'll change things.
Okay. All right. Well, it was great catching up with you, partner, and
My pleasure.
appreciate it. We'll get back together just before the election, see how things are shaping out. I think we're going to
Man,
have a Rod Serling fall. So anyway, if you like Twilight Zone episodes and
absolutely.
you always wanted to star in a Rod Serling production, whether you know it or not, you're in it.
Yeah, that's a
We're
good
all
point.
in it, huh?
It's gonna be a crazy few months.
All right. Well, uh, we'll get through it because we're warriors, right, man? So anyway, and we'll exploit it. Let's exploit it in the markets. Well, that's what I do. I try and exploit it. So
Well, I'll
I get,
exploit it for news. I'll exploit it for
all right.
news.
Well, I think everyone follow Pedro's podcasts on MNI.com. Let me just pull it up for you guys.
Marketnews.com
Yeah,
slash
market news.
podcasts.
Here you go. Oh, what is that? Okay. Here you go. Here's the website. And you can see What section do they find you in here, Pedro?
So if you go to policy on the left,
Yeah.
on the under the Fed tab is all of our stories, all of our content.
Okay. So this is, you know, you want to keep an eye on what's going on, and it's not just the Fed. It's
Oh yeah,
something more than,
we got the whole world, and now we've got somebody in. I have my colleague Larissa Garcia in Brasilia,
Okay.
covering both the Brazilian central bank and the Central Bank of Mexico. She's covering the G20 right now. She's in Rio, so we're expanding.
Okay. So it's going to be interesting to see how Trump and if Trump gets it, and the president of Mexico, which are from opposite um, philosophies, you know, one being conservative, one being ultra liberal, right? She's
Yeah.
pretty ultra. So watch that peso next year. It's going to be some nice trades, Trump trades in the peso. You ever see the cartoon where he's making phone calls about making an announcement about tariffs, and on the
No.
left he has a bank of phones and charts up on a screen. I would do it too. Anyway,
No
so
comment. No comment.
yeah. Anyway, have a great weekend, Pedro, and talk to you in October. Appreciate you
Sounds
being
good.
here and sharing your sources with us. And uh, let me know when you hit 200.
Sounds great. Thanks for
All
having
right.
me.
Pedro DaCosta, follow him on X at P DaCosta, so you know what the hell, after you listen to Paul and you don't know what the hell he has said to you, Pedro knows how to interpret that foreign language. So go check him out. And that's going to be a wrap for me for the week. TGIF, everybody. Don't just count your pips, count your blessings. Do your work. Have a plan for next week. Fed next week, BOJ. We have a lot of stuff going on next week. Hope you had a good week and enjoyed gravity in the stock indexes. Yes, Isaac Newton, it still exists. And don't just count your pips, count your blessing. Adios, Scott. Nice to see your name there. Marcus, you're welcome. Pedro, thanks again. And we'll see you on Monday. Thank you, AJ.